Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007.
And welcome to the deep dive. Our mission is simple. We take source material, like the news updates you sent over, and we help you quickly get to the heart of what's important.
Yeah, cut through the noise, find those key insights, those aha moments.
Exactly. Today, we're diving into a stack of recent small cap breaking news reports, all from May 22, 2025.
Right. Think of this as a curated look at specific company announcements. We've got mining, tech, energy. Could be significant implications here.
We'll be looking at Minaurum Gold, Reklaim Ltd., Hemisphere Energy, Troilus Gold, and Giant Mining.
And the goal isn't just, reading headlines. We want to highlight the actual results, the drill numbers, the financials, the strategic stuff.
The details that an investor, or really anyone curious, might find compelling enough to dig deeper.
Okay, let's unpack this stack then.
All right, first up, Minaurum Gold Inc. You'll find them on the TSXV Venture, symbol MGG, and OTCQX as MMRGF.
And the headline grabbing attention talks about a stacked vein discovery at their Alamos Silver Project. That's down in southern Sonora, Mexico. What's the real story here?
Well, what's really fascinating and kind of the core news is the type of discovery. It's a stacked vein system.
Okay, stacked veins. What does that actually mean?
Like multiple parallel veins of mineralization, sort of layered one on top of another. And the significance, this the source material points out, is that similar systems found elsewhere in Mexico, I think Las Chispas, have been economically huge game changers.
Right, so finding this kind of structure is a big deal.
It really is. It sets a very strong stage for their upcoming maiden resource estimate. Gives a lot more potential scale.
And they've got some numbers to back this up, specific drill results.
Oh yeah, pretty compelling ones. Hole AL24120, for instance, hit 10.2 meters grading, 453 grams per ton silver equivalent.
Okay, that's high grade over decent width.
And that's not all in that hole. There was another zone, 8.6 meters grading, 321 grams per ton AEQ.
Any other standouts?
Definitely. There's a really high-grade copper intercept mentioned. Hole AL24125 hit 0.65 meters, so narrower, but grading a massive 958 grams per ton AgEq.
No.
And the source clarifies it includes 7.69% copper. That's, very high copper grade. And these aren't just isolated hits. They build on previous strong results mentioned in the source.
So finding this stacked system plus these kinds of grades, it really suggests significant potential, especially before they put out that first resource number.
Precisely. And you can hear the confidence from the leadership. The CEO, Daryl Rader, is quoted.
What did he say?
He said, "There are a number of prolific stacked vein systems that have recently been developed in Mexico. Our drilling is returning higher grades in the pinches and wider widths in the swells than anticipated." So he clearly sees their results fitting the successful model.
Okay. So for you, the listener, if you're tracking high-grade silver, maybe looking at Mexico.
Yeah, confirming this kind of structure with these specific strong numbers, that's definitely an aha moment. It goes beyond just one lucky drill hole.
All right, let's shift gears completely. From mining, let's jump over to technology. Reklaim Ltd.
Reklaim, right. They trade as MYID on the TSXV Venture and MYIDF over on the OTC.
And their news is about record Q1 revenue growth, and they've launched a new service. So financials and a strategic move.
That's the core of it, yeah. Strong Q1 2025 performance and this new product launch.
What are the key numbers?
Well, the headline number is hard to ignore. Revenue for Q1 jumped 73% year over year.
73%? That's a big leap.
It is. Hit $1.26 million.
Yeah.
And they did that while keeping a really strong gross margin, 81%.
Wow, 81% gross margin. That's healthy.
Very healthy. Means for every dollar in revenue, they're keeping 81 cents before hitting other operating costs. And the growth wasn't just one thing. It was across the board.
Like what? What drove that growth?
Platform data sales surged 94% year over year. Deal revenue was up 90%. And their identity revenue grew 24%. So broad-based strength.
Okay, and then this new service they launched, Reklaim Protect. What's that about?
So Reklaim Protect is a paid subscription service for consumers. Think data removal, dark web monitoring, that kind of thing.
Ah, so going direct to consumer.
Exactly. And the source highlights this because it adds a, quote, high margin recurring revenue stream, which is, what investors love to see.
Recurring revenue, right. And how are they managing financially overall?
Seems pretty well. They mentioned reducing their monthly interest expense by 51%, which is significant. And they ended the quarter with about $350,000 in cash.
Okay, so growth plus some financial discipline. If we zoom out a bit, what's the bigger picture here?
Well, this growth isn't happening in a vacuum, right? It lines up perfectly with tightening global privacy regulations.
Like GDPR and all the state laws in the U.S.
Exactly. The source notes that just in 2024, 19 U.S. states updated their privacy laws, generally giving consumers more control and demanding more transparency from businesses.
So Reklaim's model fits into that.
It seems to. Their core model is opt-in. Consumers agree to share data for some value. As compliant, consented data gets harder for businesses to find, Reklaim's approach potentially becomes more valuable.
And this new Protect service.
It complements their existing business-to-business work by opening up a direct-to-consumer, B2C revenue stream. Broadens their market.
Makes sense. Is there a quote from management?
Yeah, the CEO, Neil Sweeney, kind of connects the dots. He says, "We started 2025 with momentum, achieving record revenue and expanding into new B2B platforms. With Reklaim Protect, we're unlocking a new, high-margin, recurring revenue stream aligned with our mission to give people control of their data."
That really ties it together, leveraging the regulatory tailwind and adding new revenue. So for you listening, this is a good example, maybe a different kind of aha moment.
Yeah, seeing how those big macro trends around data privacy can directly link to a specific company's performance and strategy.
Okay, let's pivot again. How about we turn to energy? Hemisphere Energy Corporation.
Hemisphere, right. TSX venture symbol HME and HMENF on the OTCQX.
And their headline points to, well, strong performance, renewing their credit facility and focusing on shareholders. Sounds positive.
Yeah, this update really paints a picture of a Canadian oil and gas producer having a very solid Q1 2025.
What kind of numbers are we talking about?
Records.
Yeah.
Record production. 3,833 barrels of oil equivalent per day, or BOED. That's up 21% from last year.
Okay, decent growth. Revenue.
Record revenue, too. $27.3 million, which is a 30% jump year over year. And they reported a healthy operating netback, basically their profit margin per barrel after direct costs of $49.27 per barrel.
Strong margins. What about cash flow? That's always key in energy.
Very strong cash flow metrics. Adjusted funds flow, AFF, which is kind of like cash from operations, was $12.7 million, up 26%.
And free cash flow, cash left after spending.
Robust, $11.5 million in free funds flow. That works out to about 7.12 cents per share for the quarter.
So generating significant cash. How's their balance sheet?
Looks solid. They grew their positive working capital to $14.1 million, up from $4.2 million last year. And they renewed their $35 million credit facility, importantly, with no money drawn down on it.
So financial flexibility there. What about the shareholder focus mentioned in the headline?
Yeah, this really stands out. Beyond the strong operations, they're actively returning capital. They declared a quarterly dividend of 0.025 per share.
Okay, dividend payment.
And they bought back and canceled shares about $1.3 million worth, taking 709,700 shares off the market.
Buybacks too, and they did all this while keeping spending low.
Exactly. Capital spending was just $1.2 million in Q1. Very disciplined.
That raises an interesting point, doesn't it? You have this company, seems very focused on generating lots of free cash.
Right, and they use technology like polymer flooding, which the source mentions helps keep their production decline rate low, making things stable.
And then they give that cash back to shareholders through dividends and buybacks, rather than chasing aggressive growth.
Yeah, it poses that classic question. In a volatile energy market, is this kind of disciplined, cash-generating, shareholder return-focused model more compelling than just going all out for production growth?
Something to consider. So for you, the listener, if you're looking at energy, maybe smaller producers.
Hemisphere's numbers here and their stated strategy. It gives you a really clear picture of their approach. Operational efficiency, low decline, strong cash flow, and shareholder returns.
Got it. Okay, let's swing back to mining. Troilus Gold Corp. next.
Troilus Gold. Symbol TLG on the TSX and CHXMF on the OTCQX.
And their headline highlights extending a high-grade copper-gold zone right up to surface at their project in Quebec.
Yeah, this news zeroes in on new drill results from what they call the Southwest Zone, basically confirming and extending mineralization they already knew about.
What kind of grades did they hit?
Pretty good ones, and importantly, close to surface. Let's see, hole SW25-681 hit 36 meters, grading 1.79 grams per ton, gold equivalent, or AUEQ.
Okay, 36 meters.
And within that, there was a richer section, 23 meters grading 2.44 GT AUU, starting just 51 meters downhole.
Very shallow. Any others?
Yep, hole SW25709 returned 21 meters, grading 1.52 GT AUEQ, and that started only 44 meters down the hole.
Okay, solid intercepts. But the key thing highlighted is extending this to surface. Why is that so important for a mine project?
Well, what's really interesting here is how these specific results tie directly into their mine plan. This southwest zone isn't just some random target.
Right. It's significant.
It's where they plan to do their mining in the early years 1 to 5 of their planned 22-year mine life, according to their feasibility study.
Ah, okay. So hitting good grades near surface then.
Exactly. It means they could potentially mine better grades earlier in the mine life. That helps de-risk the project up front. It can improve the economics in those crucial initial years and potentially shorten the time it takes to pay back the initial investment.
Makes sense. It adds confidence right where they plan to start digging.
Precisely. Adds confidence to their resource model in that key early mining area. And the CEO, Justin Reed, basically says as much.
What was his comment?
He's quoted saying, "We continue to be encouraged by the positive results reported from the Southwest Zone. These results continue to de-risk and add confidence to the block model."
So directly linking the drilling to de-risking the plan. For you listening, this is a key insight, right? Understanding how drill results.
Yeah, how they aren't just abstract numbers. They can directly impact when and how a company plans to mine, how the economics might shape up, especially early on.
Okay, one more company to cover. Giant Mining Corp.
Giant Mining. They trade as BFG on the CSE and BFGFF on the OTC.
And their headline is about drilling high-grade copper at a project called Majuba Hill, with implications for expansion and the U.S. supply chain.
Right. This update focuses on results from just the first drill hole of their 2025 program at Majuba Hill, which is in Nevada.
First hole. Okay, what did it find?
Delivered some pretty compelling copper grades. The main intercept was 169.5 feet, grading 0.41% copper.
Decent grade over a good width.
But within that, it got much better. There was a section of 40 feet, grading 1.36% copper.
Okay, getting richer.
And then a real standout interval, 10 feet hitting a remarkable 4.36% copper.
Wow, 4.36% copper.
Wow, 4.36% copper. Even over 10 feet, that's very high grade.
Extremely high grade. The hole also hit a much wider zone, over 379 feet, grading super 3% copper. And the source mentions it confirmed strong supergene enrichment near the top.
Which concentrates metals.
Exactly. And also primary mineralization deeper down.
So finding grades like that, especially the 4.36% intercept in Nevada, what's the significance there?
Well, it brings up that whole critical minerals conversation, doesn't it? Copper is absolutely essential for electrification EVs, the grid, renewables.
Foundational, really.
Totally. So finding results like this, showing very high grades within a larger system in a mining-friendly place like Nevada in the U.S., that's significant for potentially boosting domestic supply.
And the deposit seems like it could grow. That's the implication. The results apparently extended mineralization deeper and also northwards, meaning the system is still open. The known resource might not be the full story yet.
And management connects this to the bigger picture.
Yeah, the CEO, David Greenway, directly ties it to that strategic context. He says, Nevada continues to prove itself as a world-class mining jurisdiction, ideally positioned to support the America First policy and bolster domestic resource security. We're very excited by the strong results from the first hole of our Phase 1 drilling program at Majuba Hill.
Okay, clearly framing it within that domestic supply chain resource security narrative. So for you, the listener, if you're thinking about those big themes.
Energy transition, supply chain security, seeing specific high-grade results like this from a U.S.-based copper project provides a tangible example of how companies are actually working to meet that future demand.
Right. So wrapping this up, what does this all mean? We've covered quite a bit today.
Yeah, a real mix. Precious metals exploration with Minaurum, data privacy tech with Reklaim, oil and gas production with Hemisphere, and then more metals development with Troilus and Giant Mining.
And in each case, we tried to focus on the specifics, right? The measurable results.
Exactly. Whether it was those high-grade drill intercepts suggesting value in the ground, or the concrete financial numbers, revenue growth, margins, cash flow.
These weren't just, vague updates. They pointed to specific strategic moves, potential future impacts.
Hopefully giving you, the listener, the kinds of details that let you look past the headlines, gain some real insight into the progress and potential here.
And maybe help you decide where you might want to dig even deeper yourself.
So here's maybe a final thought to leave you with. We saw companies creating value, or potentially creating value, in really different ways today.
Yeah, discovering resources like Minaurum or Giant.
Benefiting from regulatory changes and new tech services like Reklaim.
Or focusing on operational discipline and shareholder returns like Hemisphere.
Right. So the question to mull over is, when you're looking at opportunities, especially in the small cap space, how do you weigh these